Hello everybody, welcome to the Flow Show. Sorry for the delay, just been a bit caught up in stuff. I'm just in the middle of getting everything set up. Lots going on. I'm on my own today, so give me a second and I will be with you momentarily once I've got my screens set up and whatnot, because I'm in a bit of a mess. Let's get rid of that. Oh, glad it's bloody Friday, I can tell you that for starters. Right, let's see if I'm ready to rock and roll and get all the screens shared and whatnot. No, I'm not. Give me 1 second. I don't even know what day it is today. It's Friday. Oh, dearie me. Right, share screen. And that's running, Make sure my squawk's off. Oh, dearie me. Sorry. Apologies for my tardiness today. Might be a bit of a quick show. Anyway, right, here we are, ready to go at last. Phew. Well, I think I'm ready to go. Anyway, right, where shall we start? Let's start with a bit of data coming out of Japan. We had the Tokyo CPI numbers. These are the first numbers we get of the new month for inflation for Japan, and a little bit mixed. Headline CPI coming in lower than expected, 2 pips lower than last month at 2.9%. That's not too good for the Bank of Japan. Core CPI as well, coming in lower at 2.9%. So not good there. But one of their other core measures, the fresh food and energy, stayed unchanged at 3.1% as expected. So that was still pretty positive there. Overall, has it changed for anything for the Bank of Japan? Well, according to Bloomberg sources, the Bank of Japan is still said to see potential rate hike environment this year. And they are expected to see enough data by the year end to weigh a hike. They also see that there's no need to make any drastic changes to their outlook. And they see the US trade deal as reducing some of the uncertainty. Obviously, sources pieces, so take with a pinch of salt. But the next BOJ meeting could be interesting. If not, for the fact they might actually hike there, I think that's low probability, but what they might indicate for the future. Obviously, they're still in the midst of this political mess going on. And if there's one thing we've learned from the BOJ, is that they've always ready to pull an excuse out if they feel there's more uncertainty that could affect what they need to do. So they're never out of the frying pan, these guys. So we never know. Next BOJ meeting could be pretty interesting, as I say, at least for them to give an indication of what they're going to be doing in the future. Japanese PM Ishiba has apparently ordered a team to assess the US tariff impact. It says it's key that the deal is implemented properly. This goes on what I was saying yesterday, is that it's okay for Trump and whoever else to shout from the rooftops, yeah, we've got to deal with Japan. It works differently in Japan. They need to get it signed, sealed in paper, rubber stamped and everything, so that they know how they're going to implement it and know what they are working to. You cannot just tell these guys, yeah, we've got a deal, carry on, and expect them to do that. That's not the way things work in Japan. We did get a story from Gigi saying that an LDP member of the House of Representatives, Sasakawa, has said he's got the necessary signatures to request a convening of a joint meeting of both houses of the Diet, i.e. both houses of Parliament. I'm not 100% sure on what that exactly means, whether that's to look for leadership changes, see how sessions are going to be moving forward, because now there's no majority government, or what's going to happen with that, I'm not too sure, but just keep that at the back of your mind, just in case something untoward comes from that. Data this morning, we had retail sales from the UK expecting to see a half decent bounce from the negative numbers last month. We got a bounce of sorts. not as much as expected, pretty much all of it missing expectations. Headline sales 0.9 from 1.2 expected. Core sales 0.6 from 1.2 expected. So not quite the bounce people were thinking. Retail sales numbers are very volatile. You only have to look at the chart for that to see how these things can swing around. No real trend on the monthly stuff. When you get a big dip, you usually get a big rebound, but that wasn't the case this time around. What does it mean? I know people might be calling this bad data because it wasn't as much as expected. It was positive. So that's the small thing to take from that. Year-on-year sales running okay-ish, 1.8%, 1.7%, 1.8%. There has been a bounce. If the weather remains good, we're coming into summer, so we might see that continuing and maybe a little bit of a summer trend developing. But if not, if next month is a negative, then it is going to look much weaker for the UK. We also had German IFO numbers out, which is largely firm sentiment data. The business climate improved over last month marginally to 88.6 from 88.4. Current conditions improved slightly, 86.5 from 86.2. Expectations improved slightly to 90.7 from 90.6. What you will notice is all these numbers missed all those expectations. So numbers went up, but not as much as expected. And the only reason the expectations number went up instead of being unchanged is because last month got revised down to 90.6 from 90.7. So that would have been unchanged. So there has been an improvement, but we're not going gangbusters here. German firms aren't seeing the wood for the trees, the light at the end of the tunnel in terms of how the economy is doing. Neither are they seeing a rapid response to all this investment spending. It's not happening just yet in, let's call it bricks and mortar, pounds and pence, euros and cents, if you want to put it that way. So there's still reasons to be cautious about Germany. We're not going to be rushing to an economic boom anytime soon. A bit of data from yesterday, just starting off again with the UK. We had the CBI Industrial Trends orders, so this is manufacturing, production, that sort of thing, coming in less crappy than it did last month at -30, but it was expected to be even less crappy at -27. So it's still a pretty negative number. On the selling price front, that went up to 21 from 19, so a bit of inflationary impact there. Optimism for the future, that fell to -27. Again, not as crap as the -33 previously. So overall, no looking like any major pickup in the industrial side of the economy. We've got initial jobless claims. They're still running all okay. We're actually seeing them edging down again in the headline number, down at 217,000. That 4-week average coming down as well, 224. So no tree shaking there. Continued claims, they look to be settling around this mid 1.9 million mark. So we're not making a trend one way or another at the moment. So again, no real problems there. Canada retail sales came in a bit sucky. They came in as expected, down 1.1%. Ex-autos was not as bad as expected, still a negative though, -0.2% versus -0.3 expected. Then we got the first PMI numbers out of the US, following the same theme we've seen elsewhere. Services took a decent jump, 55.2 from 53 expected and 52.9 previously. So a decent number there, as we've seen in pretty much most countries that have released these numbers thus far. However, manufacturing took a little bit of a battering, falling from 52.9 into contraction again at 49.5. That's something we'll need to keep a little bit of an eye on, though. If I recall, if I'm correct, this one hasn't been running positive. Oh no, it's not even going to show me the chart. Oh well. I think I'm correct. This one hasn't been running positive for many months at all. You see more negative numbers than you do, or more contractionary numbers than you do expansionary numbers. So that might make last month's 52.9 a little bit of a trade dip. A little bit of a trade bounce, as we noted at the time. All this front running and tariff stuff playing funny with the numbers, particularly manufacturing. New home sales came in positive at 627. They did miss expectations. It took a bit of a knock in May, but it's recovered back in June. House prices a little bit mixed, up 4.9% over last year, but down some 20,000, 21,000 over last month. So a bit of softening in prices there from the main numbers that we got. Right, ECB, they held their rates unchanged as expected. Pretty much no real change or anything in the statement. They say the information is broadly in line with their inflation assessment. They will follow a data-dependent meeting-by-meeting approach, and the environment remains exceptionally uncertain, especially due to trade. So no real lip service in that to a potential deal with the US. Lagarde was pretty boring, really. She had a sailor's outfit over, massive earrings, and some big ring on her finger. She said survey data points to an overall modest expansion. Says higher tariffs and a strong euro are expected to make it harder for firms to invest. That was note number one on the currency. She then said that a stronger euro could dampen inflation more than expected. Not an explicit warning about the currency going higher, but just a soft warning about what, if the currency goes too high, what it might do. She said market rates have increased since the last meeting. And obviously, when they're looking at that, look at things like inflation. Says we are in a good place with inflation at 2%, and that you will always find 2 or 3 governors very concerned about undershooting. A bit of a tap on the wrist for the doves at the ECB. And she said you could argue that we are on hold, which is what they are. Obviously, we've got the ECB sources. You can't finish the day without getting those. And those sources apparently said that those seeking another rate cut face a battle, and that the baseline for officials for September is staying on hold. So that was a little bit caught the market on the hop, because a lot of forecasts were predicting the next cut will be in September. ECB's Kazakhs, one of the big hawks, says no urgent need to move rates. There's still value in holding. The ECB prior easing is still filtering through the economy, and the euro is still around historical averages, but it's being monitored. ECB Simca says inflation is expected to stay at the 2% level in the medium term. So after that sources piece, what do we get? You know what I'm going to say. Everyone changing their forecasts. Goldie's kicked off first. They no longer expect a cut at all in 2025, whereas they previously were forecasting a 25 pip cut in September. JP Morgan, they've kicked their September cut forecast to October, and BNP joining Goldies in not expecting another cut for the rest of the year versus their prior forecast of a cut in September. So, you know, bank forecasts thrown on the fireplace yet again. Over to trade stuff. An EU spokey said that the EU continues to engage intensively with the US on tariffs, and says our focus is on finding a negotiated outcome with the US. We believe such an outcome is within reach. Mexican President Sheinbaum hopes to reach an agreement on tariffs, would seek communication with Trump if necessary, and has apparently presented a plan to the US on reducing their trade deficit. We had some fun and games last night. Both Trump and Powell donned their hard hats for a little walk around all these ongoing Fed renovations. And what a TV event it was. If you haven't seen it, go and watch it back, because we got to the point where Trump started telling the press and reporters in front of Powell that the spend was up to 3.1 billion from 2.2, 2.4 billion, to which Powell started frowning, and he said, where were those numbers from? I've not seen that. Then Trump pulled out a piece of paper which apparently had all these numbers on, 3.1 billion, which Powell looked at fairly closely, and then argued back with Trump that some of that cost in there was for a building that had been started 5 years ago and had already been finished. And that was just a complete bum fight and a complete shit show. At that point, a very funny outing. But other than that, Trump said that his discussions with Powell were very productive. Says he has a name in mind for the next Fed chair, and believes Powell will do the right thing. Says firing Powell would be a big move, but not necessary. And the White House again confirming that Trump is not looking to fire Powell. But yeah, as I say, if you get a chance, go back and rewatch that. It is very, very funny. I don't know if this is a reason why Aussie dollar's getting a bit clobbered today as well, but we're seeing a knockback again. But apparently Trump proclaimed that Australia has agreed to accept American beef. So I don't know if people in Australia aren't too happy with that. It has been coming anyway, but I'm just putting 2 and 2 together and probably getting 856. Right, that's it on the headlines, thankfully. So let's go through a few of the prices. As I say, might be a bit of a quicker show today as I'm on my Todd, and I'm off next week on holiday, so you'll have K-Man to keep you company. Right, so Aussie dollar, this is being a real bitch for buyers, and I've been one of them at various stages. Just when you think we're going to be taking off, making a break, getting through 66, getting through all these highs, it turns tail and it goes back through the break points, goes back through prior levels, and now it looks like it might be heading lower. Longer term, we're still in this uptrend, so that's still pretty valid. But these disappointments, I know, are going to be hurting a few traders who were long and go to bed thinking, yep, this is looking good, and then come back in and, oh, it's looking crap. So I think if we get a pullback down to this zone, this is where I'll be watching. If we hold the top of that, and I think if you're a long and if you're a buyer, you want the top of this to hold. Yes, you can get a hold down at the bottom part of the zone, but a more bullish signal will be holding the top, and then you've got a chance of getting back to these highs. But we could also just then be entering a little bit of bouncing action back up to maybe 66 and back down to the figure and back down to the zone, and then just going sideways a bit. But here we are again. As I say, this is trading. 1 minute, a certain trade's looking good. Next minute, it's looking the other way. Of course, if you're short, then you're looking pretty at the moment. And again, you want to be careful if we get down here and we start to hold that, because then if you're short and you haven't taken profit, that's somewhere you might want to think about doing, because you can't get through there. You're not going to get anything better than that. Yes, Mike, I'll go through the usuals, and Fred, yep, I'll look at that as well. Euro dollar, that's trying to turn around this 117.50. I've been highlighting this level a few times. It's a bit of a pivot level. It was a level a lot of people had on the way up, and we got plenty of resistance against it. Then we got a break, then it was support, then we were waffling around a bit trying to decide what to do, and then it held as resistance, and then we got a bigger move. So we're up here turning around this level again. So really you got to look at this as to what it does in the short term. If it starts to hold, if you get a bounce from here, say this 30 is up to 50 and it holds, then we're probably going to be looking at going for a wander down to 107, 107.10. But if we're back above and it's holding, then maybe we will go and put in a move to the 118. We've already run into trouble at the 118 up here, towards 90. So this bounce is still looking positive, but it's looking less so now. We're under this 117.50, and if it's going to start holding. Conversely, it doesn't mean we've ruled out going back up and testing these highs, but if we get a hold here again, 117.90, 118, 118.10, even up to the highs, anywhere between here 117.90 and 118. If we get a move up and it holds there, then that could be a pretty significant move. It could mark a pretty decent double top, and then we might be looking at something a bit steeper as far as a pullback goes. Or again, look at the price action. If it doesn't, let me get my little marker pen out. If it could do something like this, okay, or it could do something like this, and that would be a bit more bullish. If it comes down, doesn't quite hit the prior low in 115s, then that might give it the impetus to go and break higher. So if you're a wave counter, this is probably a wet dream move. But yeah, there's two ways this might go from here, but you can use this 117.50 as your pivot point to see whether you're going to get a direction down or up, at least in the short term. Mike, quick look at Kiwi. I've not got a lot to say. It's doing pretty much the same as the Aussie. I don't actually know why we're seeing these two rolling over a bit. I mean, it was a bit of a surprise why it was rallying so strongly the last day or so. There's lots going on in the mix, but I don't know why it's suddenly deciding to fall out a bit today. But here we go again. We get up to a pretty decent level and we can't get through. We test it and we fail. So that's one reason potentially why we're having a pullback, purely because this rally runs into the first big sign of trouble, and then buyers give up and sellers go and push their case again. So we're not in breakout territory here either. Come on to a bit of a longer chart, so you can see again we've got this uptrend still going. It's still valid. It's slowing up. It's taken a while, but it's still in play. But we ain't doing nothing unless we're getting through that zone first. Yen crosses are all looking fairly bullish again today. Euro yen off to new highs, so that's up and running. So there is a bit of a yen story going on here. Aussie yen looking pretty similar, not motoring as much as what we've seen elsewhere. Guppy as well. We're holding around here. This might be the weak sister of all the yen pairs, but even with the pound looking a bit wobbly elsewhere, it's not pulling back massively. So this is all about the yen that's going on here. Got all these prior highs to deal with that we've been knocking around. Let's get a couple of lines in if I can without messing it up. So round about there, 199.70s, 200s, if you want to call it the figure. That's your break point. If we're getting over there and finding support into that, then we're probably going to kick on. But this one might just be a bit of a slower grind, given what's going on in the quid at the moment. Dollar CAD, that's one I'm still holding because I wanted to get in it down here into these levels. I mean, got in at 135.86, 87, and we're getting a move back up. We're hitting this again. It's a little bit of a minor pivot point, 136.85. It's been a bit messy of late, but again, if you find a solid hold on it as resistance, then obviously you can get a bit of a pullback. What it is, or what might be key, is we're now trying to hold this more important pivot level, 136.50. So that's giving it the springboard to move on up. And I've been talking about this one as well. Whatever side we choose to sit on this level, then that's the way the price is likely to go. So we're running into trouble already. We've hit this moving average just below this level. We need to get above there. Then maybe we go and have a look at the zone. And, I'm not even going to be thinking about these highs until we're getting through this zone. So we're still looking constructive for a bounce against the longer term picture. But it's still on the clock and we still need to see it move up. If we get a move through this zone, then I would expect it to at least go on to match these highs, if not push on up, because this will be a really pretty solid triple bottom or support action down here. That's what you want to see if you want to see a trend starting to change. But we just about managed to get to the 50 of this latest move from May. We've got a lot more to do until we start challenging the year's trend. The 38.2 isn't until 140. So this would still be just a start if we bounce from here. But unless we're going up to trouble these levels, then we're not even close to changing the trend of the year so far. This could just be working its way into what might be just a big old bear flag. If we get up here, 138, hold it, then maybe on the longer term we are setting up for another break lower. Derege gold, of course, my friend. Can't do a show without doing your gold. I've not looked at gold for a while. Again, pivot levels, 33.30 has been on here. It has, again, got a bit messy. Why is that all looking a bit funky? It has got a bit messy recently, but we've been away for a few days, so keep an eye on that if we get there. If it holds on a first test, then maybe you're going to get a bounce back to 60s. The picture hasn't really changed. Yeah, we got another run into the 34s. We couldn't get up to the prior high. We couldn't even really match that prior high. So this is the same sort of thing I'm looking at for euro dollar. We had a high. The secondary high didn't quite get to that high. Now we've had a third attempt of getting to the secondary high and it's not holding. So don't be thinking 35, 36, 4,000, wherever. We can't get through this area yet. And the longer we go without getting through there, the greater the chance we get a pullback. Now, as usual, I'm not saying we're going to get an outright collapse. We know the wider range, 32.50s, and up towards these highs now, 34, 40s, near 50s. Okay, so you got $200 that this could range around in. So if you're looking for fresh all-time highs, then you need to pick your spots. If you're long, want to get long, try and get in at the lower end of some of these ranges, because that's your low risk area down here, this zone. Because if we're breaking through there, then we could be looking at some of these type moves where it's down to low 32s, 31s. Okay, so you don't have to be a hero. We are developing a bit of a range. We're right in the middle of the range. You can use this 33.30 to scalp off. So if you love longs, then that's your first place you want to have a go. But you don't need to be catching knives every $10, every $5 fall, unless it's against a decent level, because you don't just want to be bleeding 5-10, 5-10, 5-10 buck moves, because you've got to make it all back when you do hit a winner. So pick your points. We're in the middle of a range. As I say, don't need to be trading in here. You don't need to be trading in here if that's the way you want to do it. But of course, let me know what you're doing. Don't just ask me to waffle on. Derege, Fred, you want to know what's going on in Guppy? I want to know what you're doing in Guppy. I want to know what you're doing in gold as well. Oil, that's still looking a bit undecided, still looking a bit weak. It is continuing its sideways action for now. I did have this as my play of the day with the trade-off from Mr. Brown, because I thought if we got some good readings in manufacturing, we might find that we see oil taking off a bit. That hasn't happened, obviously, although it hasn't fallen out of bed. So this one, not paying too much attention to the data for now. I was looking at the 65 level that held. It's bounced back to 66, but we've got this zone again that it's just trying to work out what it wants to do in. I'll go on to a wider one just so you can see how important this area is. This zone is down here. It has been a very solid support area. We haven't managed to get under it for any real length of time, and we're not doing that right now. But we're in the middle of this range here, so who knows which way it's going to go from here. There were some headlines out of Russia that they are looking to talking about arranging meetings and whatnot. That doesn't mean that the war is going to end anytime soon, but it's perhaps a smallish step. Now, as we're getting trade deals done with the US, that risk might start abating. And then again, we're probably going to shift, the market's going to shift. Well, if we're over the trade hump, the tariff hump, you know, what do we look at next? We've still got this war ongoing. If there's signs that something might happen peacefully over there, then we're going to get probably a big boost to risk. So yeah, market's always looking for what is next on the agenda. And if we get over this trade stuff, Ukraine might come into it, just like it did last week, or whenever it was, you know, this week. No, last week, when we said it could come front and center, and it did for the early part of that week. What else? Yields. Always keep an eye on yields. Tens, they've bounced off of this, call it a midpoint between the range, 450, 420. Again, this is why you look at ranges. This is why you try and pick your points. This looks very similar to gold and what I'm saying about the 33.30. It's a level that is a bit messy. You might not want to trade off it, but it can give you your directional bias in the short term. We had the bottom of the range, we had the top of the range. Told you about both these levels when they were happening, and here we have this level in the middle. Okay, so it can be a bit of a decider. You don't need to trade in here, you don't need to trade in here. You trade there, you trade there, and if you so wish, you trade there, because this tells you which way the market is going to go either side of this line. And it doesn't even have to be an important line. It's not whether you see the line like that as important. It's what the market does with it. Okay, you don't need to guess about what it does. If it's staying above here, it keeps the top of the range in play. If it's going below here, it puts the bottom of the range in play. And if it's doing this messy thing, then you leave it alone until you get a clear idea of what the market wants to do against that level. Duration been short from 33.77 in gold. Okay, so that's let's have a quick flip back to gold. So let's go in that one. So round about there-ish. Okay, so were you short before this blip or after this blip? And if you were short after this blip, why were you not short higher up? But that's your levels, mate. Let me know what you were looking at. That's half the problem with when doing this show. Sometimes you guys have got ideas and charts, and unless you're in the chat room, you know, we don't get to see them. Okay, so you've got you potential. I'm going to guess that you're trading the break back under that level there, which is sensible. That's good. But yeah, just you've got to be careful just watching what you're doing in the middle. But yeah, your trade, your chart, it's working all right. Yeah, 31 bucks up, so no complaints from me. And you'll need to be watching this 33 level pretty closely. Hope you're taking some money off the table, and then you can lock up the rest and reduce your risk. Right, I'm going to have a quick look at dollar yen. I've not got much to say about it because this one is really confuddling me. It really is all over the shop at the moment, and I'm not too interested in getting involved. As I was saying to Dale on Face yesterday, you know, you can have an idea one week, and then the next week it's all shot to shit, and your bias and your thinking is completely out the window. I don't know what this one's doing at the moment. It's been up, it's been down, it's been up, it's been down. There's a lot of cross currents going on here. What's going on in the US with the dollar side of things? What's going on with the yen side of things? There's still plenty of uncertainty there with the politics, BOJ, and blah blah blah. So this one has just become a little bit messy. I'm not inclined to do anything right now. Technically, though, we're back above the 147. Trying to hold it as well, but you know, it got below the 147 and tried to hold it, and that hasn't lasted long. So maybe, again, I wouldn't be so inclined to mess around in the middle here. We've had this low here, which was a confirmation low down around 145.77, that prior low there. So that's at least given us something to work with. Another move up here, 149s to some of these highs, maybe even that level there, 144.80, 85. If we get another move up there and it holds, then maybe you've given a bit of conviction to play the edges of the range and see what it wants to do in the middle. 147 may even turn into that pivot point. So just this one I'm just going to let it ride for a bit, see how it wants to play out, and then I don't see any reason why the yen still would strengthen massively. Performance issue alert, let's give it that. But I didn't think we were going to see the yen strengthen through this period, but we got the trade deal and whatever, and the elections and whatever. So yeah, this one's a bit up in the air. Need less Messi and more Ronaldo. Yeah, we certainly do, Yao. Euro sterling, that looked like it's trying to break out. My 87.20 is trying. I've got the numbers 87.17. That's just because it snaps into a prior level going back previously. But we're looking like we want to break out. If we hold here, I'm going to seriously consider adding to my longs. I ended up biting the bullet and scratching the itch. Fortunately, I got in before this rally up, 86.78. So just down into here. So yeah, if we got a break here, this could have some legs, and it's going to look to take us at least up to the 87, 60s, 70s area up here, which is another old zone that we've messed around in quite some time previously. It was also the last decent high back in November 2023, so it is going to be a significant level up here. If we're through that, then maybe we're going for a real wonder. 88s, 89s, maybe up into the 90s, and it's quite possible. I don't see the UK improving anytime soon, but this has been a pretty strong move. We're talking 300 odd pips thus far, for nearly 400 pips, so that is a pretty strong move, and it looks more sustainable than this similar move looked. This was much faster. Obviously going on the tariff deadlines back then in April, but it came down pretty quickly after that as well. This is looking a bit more solid in terms of a move, so I will remain a dip buy for this. I've got me itch scratched, so I'm happy that I'm sitting in something now and see where it wants to go. Right, anything else for anything else, boys and girls? Or I think I'm going to call that a day, because I need to go and meet Mr. Michael Brown at the station as he's come down for lunch. We lost another bet on which way the S&P was going, but less said about that, the better. So yeah, we're going down the seafront and going to have a nice little lunch. And then that'll be me done for the week. So thank you, everybody, for coming to the Flow Show this week. Your support here is much appreciated. Your views, your comments as well. I hope we're steering you right through the trading week. If not, send a letter of complaint to K-Man next week, because I won't be here. Have a great weekend, everybody. Take care, be safe, and I'll see you in just over a week's time. Have a good one.